The stock market is just finally crashing and I just can't believe I'm saying this, guys, but I'm afraid it's time to panic and sell everything. Relax, I'm just kidding, guys. What is going on? It's your boy Nick, and yes, while the market might be crashing, I am not selling anything. Once again, unfortunately, we're seeing bond yields rise, which is again taking a left jab to the stock market, particularly to high-flying growth stocks like those in the tech sector. This is because as interest rates rise, the cost of borrowing money also does too, and this ends up reducing the profitability of businesses borrowing debt. But also because the opportunity cost of investing in bonds rather than stocks becomes a lot more attractive too. However, like I've said many times before, any type of stock market crash or correction just presents a great buying opportunity to buy your highest conviction companies at a discount. And in this video, I'll be sharing 3 stocks in particular that I personally own in my portfolio and that I will be buying more of as the stock market continues to fall. So all I ask is that you destroy the like button to help support my channel. It truly does help me out. And if you haven't already, definitely consider subscribing for more future content on investing and my portfolio updates in the near future. But now let's get into those 3 stocks that I'll be buying as the market continues to fall. Alright guys, so the first stock that I'm buying as the market continues to fall is Apple with ticker symbol AAPL. Right now I have a decent sized position in Apple that I started only a few months ago, and this would be 37 shares with a total value of $5,250 US. And personally, I could see myself doubling this position size and would be very comfortable with that, provided that the stock continues to fall. Anyways, Apple needs no introduction, which is why I'll get straight into why I think this company is going to grow very quickly over the near future. Firstly, Apple just released the new iPhone 13, and although it seems quite lackluster for an upgrade, there are some awesome changes that will create huge demand in my opinion. So Marques Brownlee posted an awesome review of the iPhone 13 in depth, and he definitely thinks that it's low-key great. So according to Marques, Apple improved the 3 most important aspects of a smartphone, which are the screen, the cameras, and the battery life, all of which saw big spec boosts that should entice people to upgrade their phones. For instance, all of the cameras have brand new sensors, the battery life has 2.5 hours more of battery life than the iPhone 12, and then of course the screen has that 120 Hz display refresh rate, which is just insane. In fact, there were huge rallies of people bursting into malls in China and trying to get the iPhone 13, along with analysts showing that there's huge demand for the new phone, but supply chain issues might be holding them back to a 1-month delivery time frame, so this might be the only downside. All in all though, I'm quite certain that the iPhone 13 demand is going to be very strong as it was last year for the iPhone 12 during COVID. And the demand might even be stronger than during COVID because of the iPhone 5G super cycle that's ongoing right now, where people are basically transitioning their phones to the 5G phones to be able to take advantage of that new network speed. Secondly, I'm also incredibly excited about Apple's Mac lineup for the coming year. Now, it hasn't been announced yet, but Apple is expected to release the all-new MacBook Pro 14-inch and then the 16-inch model with an upgrade coming in October or November this year, which I know I'll be buying for sure. It's been a long time since the MacBook Pros have been fully upgraded, so I would expect huge demand for these devices, especially considering that they will contain the new M1X chips that Apple invented that are super quick, along with the new full HD webcams for Zoom meetings and just keeping up with today's business environment and everything like that. So with these 2 growth catalysts, along with the double-digit revenue growth in all of their product segments, according to their last earnings report, I can't see Apple slowing down their revenue growth anytime soon, and I'm sure their earnings will follow. But now let's take a look at some of their valuation metrics, because I think that Apple is trading at a pretty decent price right now. So here we can see their trailing PE is about 28, and then their forward PE is 25. And based on their earnings growth rate, this does give them a price to earnings growth of 1.4, which is very close to 1, meaning that it is at a very good value. As we can see, over the next 5 years, analysts expect EPS to grow at a compounded annual growth rate of 19.6% for Apple. And then taking a look at where analysts think the stock could be in the next 12 months, we can see that the average 12-month price target is $168 for Apple, and this presents upside of 18.3% from the current price. So overall, guys, I am a huge supporter of Apple simply because I just love their products and I use them all the time. But I also think that Apple is trading at a very reasonable valuation with double-digit revenue growth in basically all of their product segments, trading at a forward PE of 25. I mean, that's pretty reasonable, and so I'll be buying them on any dip that I see in the future. Now, getting into the second stock that I'll be buying as the market continues to fall, that would be Amazon with ticker symbol AMZN. Now, Amazon is the second largest stock position in my entire portfolio right now, and it is in a very close tie to stock number 3 that I will be discussing in a minute here. So right now I own 2 shares of Amazon in my TFSA account and then 1 share of Amazon in my margin account, all in total worth about $9,950 US. So anyways, I've been talking about Amazon over the past few months now. I've made several videos about the company and talking about why I think this company is showing so much value right now. And to be honest, I think that Amazon is just getting cheaper and cheaper. If we take a look at Amazon stock, it's barely even moved over the past year, only being up about 5%. But then from the high in October of 2020, it's actually down 3%. So I'll be giving you 3 reasons why I think that Amazon stock is undervalued and why they're poised for incredible growth over the next few years. First of all, the e-commerce market is continuing to grow incredibly quickly. Ever since the pandemic, e-commerce sales catapulted and things are definitely not going to be going back to the way they were before. The global e-commerce market is expected to expand by another $1 trillion by 2025, which is honestly not surprising to see at all. In fact, I see Amazon doing much better this holiday season compared to last year, even though sales are expected to stabilize a little bit throughout 2021. Overall though, Amazon is just in a great position to capitalize on this move towards e-commerce and the rush towards the internet. Anyways, getting into my second point, Amazon is investing very heavily in its own growth right now. On September 16th, Amazon announced that they'll be opening over 1,000 small warehouses in suburbs across the US to be able to facilitate their one-day delivery. And if they're able to provide one-day delivery for a much larger portion of Prime members, this will certainly boost their Prime subscriptions, because seriously, what other company can consistently offer one-day delivery of basically any product you want to buy online? That's a rhetorical question. And thirdly, Amazon is growing its advertising revenue like crazy. In Q2 of 2021, Amazon's other revenue segment, which consists primarily of advertising revenue, grew 87% year over year to $7.9 billion in sales. Now, based on their total quarterly revenues of over $100 billion, this really might seem like an insignificant amount in sales, but you have to remember that ad revenue is very high margin, whereas e-commerce sales are quite low margin. So Amazon is going to generate a whole lot more profit from those advertising sales than they are from the e-commerce sales, so it really accounts for a much larger amount. And of course, it's growing very quickly. So those are the 3 reasons why I think that Amazon is going to continue growing, amongst many other reasons that I probably could have mentioned in this video. But anyways, let's get into the valuation of Amazon stock right now. So right now, the company's trading at basically an all-time low in terms of PE. So their trailing PE is 58, whereas their forward PE is 49. And then this represents a price to earnings growth ratio, or a PEG, of 1.8. Now, analysts are expecting Amazon to grow its EPS at a compounded annual growth rate of 35.8% per year over the next 5 years. So this is honestly incredible. And then the average 12-month price target for Amazon stock in the future will be $4,157. Which represents upside of 25.4% from the current price. So even analysts are showing that Amazon stock is pretty undervalued where it's sitting today, and I can see a lot of upside in the stock over the short term. Overall, I think that Amazon has an incredibly wide moat and that they're continuing to innovate and grow at very rapid rates, which is why I'm very comfortable holding a position of nearly $10,000 in this stock. And finally, guys, the third stock that I'm buying more of as the market continues to fall is Facebook with ticker symbol FB. As you all know, Facebook is one of the largest positions in my portfolio, being right behind Amazon. Right now I have a position size of 27 shares worth about $9,180 US, but I do think this is too small for the amount of value that I do see in Facebook, and I would plan on buying a lot more if prices continue to fall. Ever since Facebook's last earnings report, the stock has been up and down simply because the forward guidance wasn't that great. Facebook thinks the impact of iOS 13 could be more pronounced as we see more data from people opting out of targeted ads, but also because ad rate growth might be slowing ever since we saw a huge surge coming out of the pandemic. Personally though, I do feel that Facebook is just being conservative and that they're going to blow these expectations out of the park. Also, we recently saw that Facebook released their Facebook Stories glasses, which was a collaboration with Ray-Ban to make smart glasses. Based on all of the reviews I've seen, people seem to really like them, and I think it's awesome how you can seamlessly upload your video or photo content to Instagram or Facebook. But guys, this is just the first step in creating VR, AR technologies for real-life use. Mark Zuckerberg is much more ambitious and has huge plans for VR, AR for the future of Facebook, and this is one of the reasons why I see so much more growth out of this company in the next few years. But now let's take a look at their valuation, because I think Facebook is dirt cheap right now. So here we can see their trailing PE ratio is 25, and then their forward PE is only 21. And based on their future earnings growth rate, this gives them a PEG ratio of 0.93, so when it's below 1, you can obviously tell that the company is very undervalued. And that of course is based on analyst estimates over the next 5 years, so the EPS growth rate that they think will happen is 28.6% per year, which is very quick, almost up to par with Amazon. And then analysts have an average 12-month price target for Facebook of $417, which does represent upside of 22.6% from the current stock price. Overall, guys, it just seems that Facebook's true value isn't being reflected in the stock price right now, and that they will have a huge amount of upside in the coming future if they do perform very well on the next earnings report. Overall though, I really do love what Facebook is doing with VR and AR technology, and I think that even though they sandbag their guidance, they are going to grow at unprecedented rates over the next few years. Anyways, that is all I have for you guys today. The 3 stocks that I'm going to be buying as soon as I get the money in my brokerage account are Amazon, Facebook, and Apple. But let me know your thoughts in the comments below. What do you think of these stocks? Do you think they're undervalued or overvalued or fairly valued? I would be curious to know, because at the end of the day, valuation really is subjective and not an objective number. So I would be interested to know what you guys think about these valuations. Or if you're buying some other stocks in this market crash, do let me know too, because I want to check them out. Anyways, if you did enjoy this video, make sure to drop a like for the YouTube algorithm. And if you haven't already, definitely consider subscribing for more future content on investing. And I will see you guys in the next one.